Advanced Financial Accounting OneNote Practice Problem. In this presentation, we're going to work a practice problem in OneNote related to segment reporting. Get ready to account with Advanced Financial Accounting. Here we are in OneNote. If you would like to follow along in OneNote and you have access to it, you don't have to because it's not required, but if you have access and you would like to follow along, we're going to be on the 1323 section. That's going to be the segment reporting. It's in the problem presentations. Closing this up, we're going to go through all the information first for the practice problem. Then as we work through the practice problem, we will be pulling relevant components of the information at that point in time. Our goal is to make segmental disclosure worksheets. So you're imagining here we have our company, we have different segments that are going to be included within the company. We have reporting requirements for those different segments. We want to put a worksheet together that's going to break down some of that information, such as the revenue by section, the net income that's going to apply out to each section, each segment, the combined income, any inter-segment eliminations, and the assets for each segment so that we can apply as well. We have the information for the disclosures, some information that we may need for the disclosures with this worksheet, as well as being able to test for which segments are required to have further disclosures using our 10% rules, our 10% testing rules, those being basically on the top line, revenue line, and then the bottom line, basically net income 10% test rule that will apply there, and then the assets 10% test. Okay, so let's take a look at the information. We have the consolidated corporate data for the year. So this is for the year consolidated. Sales, 1,015,000. Consolidated income before taxes is 145,000. Total assets then, the 1,350,000. Then we have the data reported for the operating divisions, and we're just going to simply call the divisions A, B, C, and D. So those are going to be our divisions, A, B, C, and D divisions. So we have the sales to outsiders, so sales to outsiders for A, B, C, and D. Intersegment sales, so intersegment sales for A, B, C, and D. And then the traceable costs, and then the total, and then the assets for A, B, C, and B. So this is going to be the balance sheet side of it. Then we have the intersegment sales are priced at cost. So intersegment sales, when there's sales to different segments, they are priced at cost. Therefore, we don't have to eliminate basically gains and loss on the intersegment sales. All goods have subsequently been sold to non-affiliates. Some joint production costs are allocated to division based on the total sales. The joint costs were 57,000. And then we have the corporate center. So when you're thinking about the corporate office, that's not a separate segment. We're not going to include that as a separate segment because there's no revenue and expense from the corporate center. It's a cost center, basically. So it's not going to be a segment. So we have information related to the corporate. General expenses, 34,000. Assets that the chief operating decision maker did not use in making the decision regarding the operating segments. That's going to be 134,000. Okay, so this is what our worksheet's going to look like. We're going to have our information on the left. This is going to be the segment disclosure worksheet. Once again, putting together some information that we may need for disclosures for the different segments, as well as tests that we might have to apply, the 10% tests to determine the type of reporting or how much reporting might need to be applied to each of the segments. Okay, so then we got the segments being A, B, C, and D. We have the corporate admin, the combined total here, and then we have inter-segment eliminations. So if there's any elimination items we need, and then after the elimination items, that'll be our consolidated number. All right, so we're going to have the revenues. We're going to start off with the revenues. We're just going to be pulling this from the data. I'm going to look at the same data down below, but it's a little bit smaller so that we can see it. So I'm going to be scrolling down constantly to the data down here, where we have the segments A, B, C, and D for the amounts 361, the 159, the 441, and the 56. So those are going to be here, A, B, C, and D, and then we're simply going to combine those and give us the total. So here's going to be the combined total, 1,017,000. There's not any elimination entries that are needed. Therefore, the consolidated amount is then the same. Then we have the intersegment sales. Same thing. This is intersegment sales in that we're going to be pulling this from our data down below. Intersegment sales were determined to be 80,000, 0, 22,000, and 25,000. Those numbers then applied into our table. Thusly, we combined them together to get that 127,000, which is the sum of these four numbers. That one is, because it's intercompany sales, we're going to remove it on the sales side and then the expense side. Therefore, for the consolidation, it will be down to 0. Then if we add these up, we're adding up just the columns now. So these two numbers, obviously, these two numbers added up here gives us the 441, the 159, the 463, and the 81,000. As the table would typically be, as you would expect in a table like this, we can add this number up a couple different ways. It's useful to do that because it's kind of for a check. So this could be added up as 1017000 plus the 114000. That would give us, then let's do that one more time, 1017000 plus the 127000. And that gives us the 1,144,000. That would also be the same number if we added these three numbers up. So the 441,000 plus the 159,000 plus the 463,000 plus the 81,000 is the 1,144,000. Then we had this subtraction. So we had this subtraction happening here. Once again, you can add them up this way, or you can add them up this way, just these two columns now. So this is going to be the combined column and the elimination of the 1,144,000 minus the 127,000, and that's going to give us the 1,017,000. Okay, so there's our revenue side of things. Something funny happened. I moved this thing. All right, revenue side of things. Now let's move on down to the allocation percent. This is going to be useful when we do some of our testing or our allocation. So the allocation percent, we're simply going to take the total revenue and be dividing that by the combined number here. We're not going to divide by the consolidated number, but the combined number. So we're going to be taking the 1144000. I'm sorry, that's not the right number. That's going to be the bottom number. We're going to take the 441000 divided by this number, the 1144000. That gives us about, if we move the decimal over, 38.55. This number then, same process, 159000 divided by the total, 1144000, and that gives us about 13.9 if we move the decimal over. And we'll do it again, 463, that's backwards, 63000. Divided by the 1144000. There's our 40.47, and one more time, 81,000 divided by the 1144000. That gives us our 7.08%. So there's our percentages. Let's see what else we have then. Operating costs now, traceable costs. We're going to put these as negative numbers as they are costs. And we're picking these up from our table. So straight from the table, once again, for A, B, C, D division, 259, 104, 304, 96. So there we have them. We're going to be adding them up. Those four numbers add up to the 763,000. Now, this is going to include these inter-segment sales are included in the traceable costs. So that's where the other side of our elimination will go. So we're going to say the 127,000 is then going to be eliminated, bringing the total, this number minus this number, to a negative number of 636. Then we have the allocated amount that we're going to be allocating for this item down here. So it said some joint product costs are allocated to the division based on total sales. So these are going to be allocated based on the total sales. The joint costs were 57,000. So remember that number, 57,000, and then we're going to multiply those times our allocation percent up top. So we'll just take that 57,000, then 57,000 times. Now these are rounded numbers, so they're not exact. So but 0.3855, and that's going to give us about this 21,973. And then if we take that 57,000 times the 0.139, which is this number here, we're going to get the 7922, and then if we took that 57,000 times 0.40.47, we're going to get that 2367 about, because this number is rounded up top. And these numbers are using the actual number because this is rounded to 2 decimal places, and really it's more than that, right? So then we're going to be taking this amount of the 57,000 times 0.0708, and that's going to be about this 4,036. Then if we were to add up these four numbers, we're going to get to that 57,000, no adjustment there, so the combined total also going to be the 57,000. Now, if we add these two up, then we're only adding up the costs now, so the total operating costs then being the 259 and the 21,973. If we do that across, we're going to get these numbers. Then you can add these numbers in two different ways. The totals down here could be added as the 763,000 plus the 57,000. That's going to give us the 820, or you can add them this way. 280,973 plus 111,922 plus 327,069 plus 100,036. That's going to give us the 820 as well. Same thing over on this side. We can say this is going to be 820,000 minus 127,000 gives us the 69,3 or 693,000, or we can take the 636,000 plus 57,000, and we get the same 693,000. All right. Next item that we're going to have is going to be the segment profit. So segment profit will be calculated as revenue minus the operating costs. So that's going to be the 441,000 minus the 280,973. That gives us the 160. I won't do this all the way across, but the 159 plus the 11, and then the 463 minus this, and then this minus that is going to give us our totals. Notice we have a loss for D here. And then if we add these up, if we add these totals up this way, we get to the, let's just do that real quick. We'll add these up two ways again. 160027 plus 4707S plus 135931 minus 19036 gives us the 324,000. We can add them up vertically as well as 763000 plus 57. I'm sorry, not that. That's not what we do. We take the total revenue 1144000 minus the 820,000. That gives us the 324,000 as well. And then we have this 27,000 canceling each other out. So this carries across this way. And of course, we can do the same calculation this way as well, which would be the 1017000 minus the 693,000. And that's going to give us the 324,000. Okay, so then we're going to go to the other items. So we have the general corporate expenses. So remember the corporation, the corporate office expenses here isn't a segment, but we have expenses applied to them of the 34,000. So we got another column for that 34,000 that was given to us down here in the problem. We're going to put that into basically like the general corporate expenses here, and that'll add up to the total. So that's going to be in our combined total, no adjustment for it. So it's going to be coming across here to the consolidated column as well. Then we have the income from continuing operations. So income from continuing operations, we're just bringing this down. We got this plus, this number's just coming down, this number comes out, and this number comes down. Then this number comes down here, and now we got the 324,000 minus the 34,000 is the 290,000, or we can add them up this way. This number plus this number plus this number minus this number minus this number is the 290,000. No adjustments for it. Therefore, we have the ending number here at the 290,000 as well, which can also be calculated as the 324,000 minus the 34,000. So next we're going to look at the assets then. So we have the assets that we're going to have to apply out to the segments, and we're going to need to use our rule, possibly our 10% rule, to see if we have to do reporting for the segments based on the asset test. One of our rules is the 10% rule on the assets. So we're going to say segment assets then are given from the table, the 531, the 119, the 514, and the 89. So there they are here. We're going to sum them up at the 1,253,000. So there's the 1,253,000. Then we have the general corporate expenses that was given to us down here, the 134,000 item. So that's the 134,000 on the expense side of things. And if we scroll down, those were assets these are assets that the chief operating decision maker did not use in making the decision regarding the operating segments. So that's going to be applied then to the corporate admin section. So then if we add these up, we're going to say we got these two items. If we pull these down, these numbers all pull down here. The 134 pulls down here. Then we can add this up as the 1,253,000 plus the 134,000, or we can add up these 5 numbers and we should get this 1,387,000. And we can do, there's no adjustment, so we're going to get the same numbers over here on the combined amounts as well. All right, now let's go to the reportable segments. We're going to apply our 3 rules, and the general way you want to think about these 3 rules to see whether or not we have to do added reporting basically for the segments are these 10% rules. There's 3 10% rules. I would basically think about them in general by saying, well, you got the income statement kind of tests and the balance sheet tests. There's 2 income statement tests, 1 balance sheet tests. The income statement really has the top line and bottom line test. One on the top line basically being revenue, 10% in essence of revenue. And then you have the bottom line, 10% in essence of the net income. And then you've got the balance sheet test, which is basically 10% of the assets tests. So we can use some of our information from the worksheet then to work out these tests. So we have the reportable segment revenue test over 10% of the revenue. Basically, if it's over 10%, then we would have to basically do the separate reporting disclosures related to the segment. So we already did this calculation up top. So you'll recall we had the 38%, the 13, and so on, where we took the revenue for each segment divided by the total. Notice we took the combined total, and we didn't take the total after the consolidation. So the combined total here, and we come out to these numbers. So these 3, of course, are over the 10% test, and therefore would need more reporting on it. This one is below, and so it wouldn't meet the test there. And notice you do only need to pass one of these tests in order to need the reporting, but it's likely that if a division passes 1 test, meaning if these 3 are required reporting because they're over 10% on revenue, it's likely but not necessarily true that they'll be over in terms of net income as well, and likely but not necessarily true that they could be over on the assets as well. So they need to meet one of these tests. So then we have the other way we can think about it is we can take 10% of the revenue. So in other words, we can take this number, the total revenue, combined revenue of the 1144000, and apply the 10% 0.1, and we'd get to the 114,400. And then we can say, okay, are any of these amounts over the 114,400, right? And these, obviously this one, and this one are over that amount, therefore more reporting's needed. This one is not, so you would think then it wouldn't meet that test, right? So you may not have to do reporting on that one, depending on the rest of the tests. Then we've got the test on basically the net income side of things. So we're gonna be doing our averages now. So if we scroll back up top, we're gonna say that we have our revenue, our expenses, and then we've got the total operating. So here's the segment profit. So now we have the segment profit, and if we were to do our division problems here, we'd say, okay, 160,027 over the total of, and this one's actually a little bit tricky because we have a loss on this division. So this total includes a loss. So we're basically going to eliminate the loss. And there's a couple ways you could think about that. You could say, okay, this 324,000 plus adding back the loss is 19,036. That's going to give us the 343,036. And then you can take our number here. The other way you get to that 343,036 is taking the 160,027 plus the 47,078 plus the 135,931, and that gives us the same 343,036. And then once you have that, you're going to take the 160,027 divided by the 343,036, and that's going to give us about 46.65. So there's our 46.65. And then we'll do the same thing across here. So then we'll say the next one is going to be this 47,078 divided by the number 343,036, and that's going to be our 13. So there's our 1390. And then next we have this 135. So we'll take the 135,931 over 343,036. That's going to give us the 39. So 39. And then we had the loss here, and it's a loss. So these three then are over the 10%. This one we had a loss for. Then we can also think about it as basically a threshold test like we did before. We could say, all right, what if I did it this way? I could think about it as saying that we had the 324,000, and then we're going to add back the 19 plus the loss of 19,036. That's going to give us that 343.36, and if I multiply that times 10%, then it would be anything over the 34,303, which of course would be these three segments applying would be over that test. Okay, so then we'll do the asset test. So this is the third test that we have here, the asset test. Same kind of process. We got the total assets down here. So we've got the total assets, and we'll do our division problems. Now, we're not going to be taking into consideration the general corporate expenses because we're looking at the segments. So we're going to say we got at the segments, the 531,000 divided by the total, which is going to be this item, 1253000. That's going to give us about 42. So there's about 42. Then we will take the 111, so the 119,000 divided by the 1253000. That's going to give us about 9.5. So notice it's not meeting this one. It doesn't meet B doesn't meet this test, but it meets the other two. Therefore, we'd still have to do the added reporting for it. It still meets, you only have to meet one of them. So then we're going to say, all right, then we have the next one is going to be the 514,000 divided by the 1253000. That's going to be the 0.41. And then we have the last one, which is the 89,000 divided by the 1253000. And we got the 0.07. So that doesn't meet it as well. So these two don't meet it. This D doesn't meet any of them. So you would think you wouldn't need the added reporting there possibly, and then the other three, these divisions meet, two of them meet all of them, but you only need to meet one, and B didn't meet this one, is just under, but still it met the other two, so then added reporting necessary. Okay, so then the other way you can think about this total assets is you could say, well, let's just calculate the dollar amount. So I could take the total here of the 1253000 times 10%, 0.1, and say anything over the 125.3, which would include this one, not this one, right? Or this one. Okay, so then we could then have another test. The sales greater than this number to a single customer would be noted. So if we had sales over a certain number to a single customer, then we'd have to put a note, footnote. We'd need footnotes related to that. Why? Because it's a risk if you have sales that are going a single customer with a large sales going to one customer. Because if there's a problem with that one customer, then that could be a problem for us. So we want to know that. So then you're going to take your sales number. Then we're taking our sales number. And I'm looking at the segment sales. I mean, the sales to unaffiliated customers here. So the 1,017,000 or this 1,017,000 or this one, we're not taking into consideration this 127. So we're looking at that 1,101,700 times the 10%. 0.1 is the 1,017. So if we had one customer then that was over that 101.7, then we would want to note that as well.